Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
This show is brought to you by Audible. They are the leading provider of spoken audio information and entertainment. You know I'm a huge Audible fan because you can listen to audiobooks whenever and wherever you want. Whether you're at the beach, the gym, or stuck in traffic, there's nothing quite like Audible. Go to audiblepodcast.com/Lutz and sign up today. You are listening to the FinancialSurvivalNetwork.com. I'm Kerry Lutz on 1230 WBZT. Rates are skyrocketing. Panic is breaking out all over except here with ranting Andy Hoffman, his take on it. Andy, what is going on?
Well, first off, Kerry, as of this week, I am no longer ranting Andy. We have decided that I am now just plain Andy Hoffman.
Uh-oh. I'm going to have to change everything now.
Well, it's fine. I think my persona is well known by now. We're just trying to broaden our audience, and certainly not going to change the way I think, but it's changed the way I'm perceived by those who don't know me.
All right. Well, hey, you call the shots here. So Andy Hoffman is with us now, no longer ranting, and but he'll always be ranting Andy Hoffman to us.
It's fine. That's fine. I'm still going to rant, that's for sure.
Yeah. So, but hey, rates don't really require a rant. I mean, this is pretty amazing here, because I'm looking at them this morning. They're around 2.7, and the boys are losing control of the game here, aren't they? Yeah.
Well, actually, this morning it was in the low 2.8s, and as we're speaking, it's about to hit 2.9. Look, when it comes down to it, and it's what I wrote about today and what I wrote about yesterday, is, we are in the most historically overvalued bond market in world history. I mean, we're talking about the end of a 30-year bull market. Forget about the QE and the inflation and all the manipulating the markets. The fact remains that for whatever reason, fake or real, we have had a 32-year bull market. It's probably the longest bull market any of us have ever seen in anything, and it's over. It ended officially you could say last fall, even though it's bounced around the bottom, bounced around the top for the last year or so. But it's officially over, and people say, well, it's the tapering talk that catalyzed it, but not really. Everyone knows by now there's going to be no tapering. In fact, Bernanke, if you remember, in June is when he initially even made the comment, not that we will taper, that we may taper if the economy gets better. Of course, it's gotten worse. And since then, just a few weeks later, he backtracked. This was when rates had gone up to 2.7% and said, oh, no, we're not going to taper. Meanwhile, the market is going, wait a second, these guys have lost control. They don't know what they're doing. And the fact remains, there's no way that they can taper. Yes, so that means they're going to keep printing money. And at some point, we're going to call them on this and say this is a game of financial musical chairs. We have all-time overvaluations, record low interest rates at a time when you have record high inflation, record money printing that's going to only get worse. And, this is how it ends, because the entire world is tied to U.S. Treasury rates.
I'm kind of flabbergasted. I kind of had it in my head that they were going to keep a lid on these rates. And I don't know, when I went to school in economics, I was always told they can manipulate and control short-term rates, but they can't control long-term rates. And the past 5 years, it appeared to the uninitiated that they were doing very well, in fact, controlling and manipulating the long-term rates. Maybe all this time they had us fooled, Andy.
Yeah, just like they, for the last 6 months, made it appear that they have no problem controlling the gold market until you see all of the COMEX inventories draining away. You see the gold offered rate, the forward rate going negative. We're in backwardation, and now there's massive physical demand. And right now, look at this. Even silver is up today. No matter how hard they try, we're having major physical shortages. Look, the fact is that, I did a piece today showing how it's not just the Fed that has supported the Treasury market with QA for the last 5 years. It's Japan and China. Japan and China both owned $600 billion of treasury bonds in 2008 before the crisis, and the Fed owned $400 billion. Today, Japan and China own $1.2 trillion each, and the Fed owns $2 trillion plus another $1.5 trillion of mortgage bonds that they bought. The fact is these three entities, particularly the Fed, have been the only buyers of treasuries this entire time. Everyone else has been selling them. And now, in June, we found out that Japan and China sold $42 billion in that month alone. That's their biggest ever one-month sale. And now that they are sellers, the Fed is going to have to increase the QE. The problem is that everyone knows it now, that it's all about hyperinflationary money printing. At some point, you can't just bull the markets higher by printing money. And that's what's apparently happening. Just like you can't keep physical gold and silver markets down forever by creating supply that isn't there. Eventually, you have to deliver it. And that's why we're seeing the chinks in both of these markets right now, which frankly, I don't think they're going to be able to get out of.
Mm-hmm. Interesting times we're living in, that's for sure. And that leads to the next thing. They're having some kind of meeting at the White Horse Tavern. I mean, the White House. White Horse Tavern is a place I used to hang out in at Hudson Street in the Village. If you ever been to that place, yeah, you know that place. I do. A Wall Street hangout.
Mm-hmm. Well, people don't remember this because all this stuff gets erased. But if you remember back to April 12th and 15th, which is what I call the alternative currencies destruction, that's also when they hit Bitcoin. There was a secret meeting between the president and all the heads of the Wall Street banks. Okay, and that occurred, I think, on the 11th. And that very day, Goldman Sachs came out with their infamous, not just sell gold, sell short gold recommendation. And lo and behold, the very next day, gold fell $70, and then the next day it fell $130. So, whatever they were doing in this meeting, clearly they were strained. They were worried about something terrible, and they needed to get gold down. And again, this was not during a time where the stock market was in crisis or the treasury bond market was in crisis. This was just something behind the scenes that they were worrying about, and who knows what it was, derivatives, you name it. This time around, we're in the middle of a full-blown crisis. Forget that the Dow's fallen 500 points. That's nothing. It's immaterial. What matters is that the entire world will collapse if interest rates keep going up, which they will, because they have to. They're at all-time lows, and at the end of the bull market is here. So right now, I just see today, White House correspondent says, not just, if this isn't the president meeting the Wall Street guys, he's meeting the head of the CFTC and the FDIC and the Housing Administration and the Consumer Financial Protection Board, and who else we got here? The FHFA and the CFPB and the NCUA and the SEC and the controller of the currency and the CFTC. He's meeting them all in secret tomorrow. And no, this, Zero Hedge says, is he about to crash the gold market again? They're saying that tongue in cheek. The fact is that this is a incredibly sensitive, difficult, scary time for the president and his administration and his, and their green shoots game, because right now interest rates are absolutely soaring. And they have to figure out a way to quell the interest rate rising. They have to calm the precious metals. They have to get confidence back that the economy's fine and the Fed's in control. And how are they going to do that? Like we were just talking about 2 minutes ago. They can't do that. I mean, they can try something draconian like attacking the paper gold markets. But at this point, like I said, they're in backwardization. There's physical shortages. It's not going to work. So basically, they're going to try to kick the can, but I don't think they have any more ammo.
Hey, and you also see that crude oil is at 106, and it's been over $100 a barrel. 107.
We're in a big depression. In fact, it's funny you should say that, because I was an oil analyst for 10 years, from 96 to 2005. And to this day, working with some of the top oil analysts in the world, I still can't get a good sense of why there's never a 100% correlation between oil and gasoline prices. Sometimes there's maintenance on the refiners. Sometimes there's different pipelines, all kinds of reasons. But generally speaking, I have never seen a situation where oil prices are surging and gasoline price, at least here in Colorado, are at best flat. And if anything, they've been falling down. And I can't really get this together in my head, but my sense is it's just a function of the economy. I mean, heck, I saw Special K at my supermarket today for $1.99. Special K typically sells for like $4 a box. So clearly there is some real obvious evidence of an economic weakening. And now that interest rates are rising like this, I mean, we were talking about we're going to see a catastrophe in the third quarter.
Oh,
let alone the fourth quarter.
Did I tell you this story, Andy?
I don't know.
Talking to this real estate broker and I said, what do you think is going to happen to the real estate market if interest rates go up to 5%? Oh, it's going to be great for business because people will be buying more because they're afraid that rates are going to go higher. Said,
right. They want to, they're in a hurry to buy before prices go down. That's the perfect Wall Street doublespeak.
I said, oh, you really think so, huh? I'd say, oh, that didn't used to work that way. It used to send prices lower in my day, but I guess things have changed.
Well, it comes down to the BTFD, right? Buy the blank dip mentality. That no matter what happens, rates go up, it's time to buy. Stocks go down, it's time to buy. All that stuff. But the fact is, if you bought housing at the top in the mid 2000s, you're broke. If you bought stocks in 2000, in 1999, you're broke. If you bought stocks in 2007, 8, you're broke. Everyone's broke across the board. But look, if you're in the business of selling real estate, you're going to say it's time to buy, right? If you're in the business of selling stocks, it's time to buy. It's always time to buy. People could say that about me and gold, right? Fact is, I've been buying gold though for 11 years. I didn't just start buying gold when I joined Miles Franklin 2 years ago. I've been writing about this, ranting Andy stuff since 2002.
Yeah, just Google it and you'll see. Amazing.
Right.
Amazing stuff. And they never learn. But yeah, hey, one final word on India.
Yes.
They're going to have trouble eating there soon, huh?
Yes, I'm going to take credit for probably writing more about India than anyone in the past 6 or 12 months. In fact, I wrote a piece denigrating that jerk, let's say it nicely, Jim Rogers, who's, the mainstream guy who likes to go on CNBC all the time and just tell them what they want to hear. And I just recall maybe a month or two ago him going on saying, gold is $1,200. It's going to plummet to 1,000 or less because the Indian government is not going to let the people buy gold. And this is a guy who missed the entire gold bull market. I've been watching him and Mark Faber for years poo-pooing gold and just talking about other commodities, etc. And the fact is, I wrote a whole piece about that guy saying that this guy is everything that you should not be listening to. And here we are a month later, gold is $200 or $300 higher. They have now completely banned the importation of gold into India, yet smuggling is off the charts. And from what I'm reading, 90 to 95% of that gold that's smuggled gets through. As I look at my screen today, the rupee is down another 2.5% in one day alone to its new all-time low. The government is announcing all these crazy capital controls, one more crazy than the next. I wrote on today or Friday, I said, India is my vote to be the next Egypt, and frankly, it's now passing Greece on my list of most likely to catalyze the next big 2008 style crash. This is the worst in food inflation you're seeing in the world among a people that uses as much of the income on food as Egypt does, except there's 1.5 billion of them compared to 80 million Egyptians. And by the way, they are the most gold-loving people on earth, and they're being told by their government that's destroying the rupee with money printing that they can't own gold. I think this is a major crisis in the making, and I wouldn't be surprised if something horrible goes on in India in the next couple of months.
So your recommendation is buy Tandoori Chicken futures?
Oh, by the way, the Indian stock market, just like the Japanese stock market, doing fine. All's well, right? Doesn't matter that their bonds are crashing, their currency's crashing, their inflation is surging, their economy is plummeting, even they admit that. Buy the stock market, right? Because those nominal gains will last forever, I'm sure.
Yeah, well, that's a crack-up boom, pure Austrian economics at work, just like our stock market.
And by the way, do you know what the best performing stock market this year in the world is?
That's going to be an interesting answer, but no.
I'll give you a hint. They are reporting the highest rate of inflation of any reasonably non-fourth or fifth world country. It's Venezuela, which just announced their rejiggered CPI, meaning it's been altered completely, is now running at a 40% annual rate, yet their stock market has quintupled this year. How about that?
Yeah, which gives you an indication of what the real rate of inflation is. So I guess we should be investing in Venezuela stock options, huh?
Absolutely. Now that Chavez is gone, all's well.
Yeah, that's reassuring. So sign of, so they're leading the world, huh?
Absolutely.
So stock market's where it's at.
And it's the same with India and Japan. Only the 1% get to gain, make any money in these things, the banks that get all the money. But in real terms, it's barely up at all.
Yeah. Well, that's what happens in hyperinflationary economies. The stock market always increases, but not enough to really cover you. And
that's right.
No different.
Weimar Germany, perfect example. The stock market, I don't have the numbers in front of me, but I've shown it many times.
Sure.
It went up, 1,000%, 10,000%, but inflation went up 1,000,000%, and gold went up 1,000,000,000%, just to put some rough numbers out there. So don't be fooled by the Venezuelan, the Japanese, or the Indian stock market.
Or the Argentinian.
Exactly.
So on that note, milesfranklin.com and financialsurvivalnetwork.com, we've got scores of interviews. And the writer formerly known as Ranting Andy Hoffman.
Right.
On that note, Andy, next week, same time, same channel.
Absolutely.
I want to welcome our new sponsor, Audible. I've been listening to audiobooks from them for over 5 years now. I am a huge Audible fan. In fact, I've bought multiple platinum memberships. Platinum membership, you buy 25 audiobooks at a time. I just got done listening to the first 3 or 4 books of the Jack Reacher series, the one you probably saw or maybe you didn't, in the theater, Tom Cruise movie. I mean, just a wonderful book, wonderful series, expertly narrated, and so many times I'm in the car, I get sick of listening to music or news or the radio. I just put my iPod on, plays the book, and makes that trip go by so quickly. To me, this is one of the great things of the information revolution of the internet, is that you can get over 100,000 books on your iPad or iPod or iPhone instantly. Another thing that they have is courses on Audible, the Modern Scholar series. And I've listened to lectures about World War I, Shakespeare, nanotechnology, detective novels. It's so enlightening. To me, Audible is a must-have killer app for the iPhone, the iPad, for my computer, wherever I am. I'm always downloading these books. Like I say, they're a sponsor, so check them out. They've got a free audiobook and a 30-day free trial membership. Just sign up at www.audiblepodcast.com/Lutz, Lutz. Again, audiblepodcast.com/Lutz. Sign up today. Like I say, this to me is a dream sponsor. These are exactly the types of things that I like to pass on to you because I'm such a fanatical, over-the-top Audible user. 5-6 years I've been listening, hundreds of books. I used to think I was a well-read person, and it's a little strange when somebody asks you, did you read that book? And you have to say, well, somebody actually read it to me, but they actually did a better job than I could have, so I don't mind it. But my friend Sean Perger up in Vancouver, he listens to almost as many as I do, and he can't get enough. I know you're going to love this company, love their service. I do. So check them out. audiblepodcast.com/Lutz.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.